So today we will teach you about the payroll. So do you know how to read your payroll? There are many salary source deductions. And so I would like to help you to look at all those source deductions and understand which item is about what. The second part is how to get tax refund by using Rsp. Now it's the Rsp season. Now we say we already pay so much income tax, but how we can get the tax refund. So I will show you the strategy. Then number 3, what are the investment choices for Rsp? So we open an account, but what are the choices? So you need the guidance, right? So I will show you the different options that could be available to you. And today will be a half-hour teaching, lecture, or sharing. And then mainly, I will leave the other time for you to ask questions. So I will do it as like a workshop, so everybody can feel free to ask your questions, okay? So payroll, we got paid by working in a company, working for our employers, right? And there are many source deductions. Have you ever wondered, my boss told me that I can get paid this much, but how come the money deposited into my bank is not so much? Have you ever wondered about that? So where the money goes, right? So let me first of all, let me help you to understand income tax. In Canada, we have a federal income tax and we also have a provincial income tax. Since we are living in Quebec, so today we are just focused on the Quebec income tax. So how it works, the more you earn, the more you pay the income tax. So here's the tax rate, and we can see if your annual income is 40,535 or less, your federal income tax is 15. Don't forget, you're living in Quebec, so by this amount that you earned, you have another 15% that need to pay to Quebec government. And then of course, when your income increase and you realize that your tax rate increase as well, okay? So that's why we say, well, it's a tax season. It's very important for us to understand how the tax works and how we can get the tax saving by using Rsp. And here is about the payroll. The payroll, so you got your paycheck every 2 weeks and you realize there's a lot of deductions. What are those deductions means? Okay, so here is a summary about all the payroll deductions. I give you an example. In Quebec, your annual gross salary income is 60,000. So this is what you sign a contract with your boss. Okay, my annual pay is 60,000. And after that, how much you can bring home? Not 60,000. Where the money goes? Number one thing, we need to have unemployment insurance, right? If we got laid off, we lose our job, we still need to pay our bills. So the employment insurance can cover that. In Quebec, we also contribute to Quebec pension plan. We have a basic exemption. Above this amount, we will take a certain percentage from you as employee and also from the employer. Also need to allocate some money into this Quebec pension plan. So both of you and your employer contribute to the Quebec pension plan. Then of course, there will be new baby born into the family. The parents need to take time off. Then we say, well, what are the funds comes from? It comes from Quebec Parental Insurance Plan. So we call it QPIP. Then also employers will contribute to health service funds. That's why we got our Medicare card, we go to hospital, we go to the clinic. We don't need to pay extra. Where the money comes from to pay the doctors and the nurse? It comes from those funds, right? So let's look at the payroll. So on the left-hand side is employee. Then you can look at this amounts and see how much deduct from your paycheck. From the employer side, it's more like for the business owners. I wouldn't get too much into that at this moment, but you also understand that your employer also contribute to unemployment insurance, Quebec pension plan, QPIP, and health service funds. Health service funds is only the employer contribute. You don't need to do so, all right? But for you, you have income tax to pay. right? When we look at the tax table, you realize that federal income tax from 15% to 20.5%. The more you earn, you got the marginal rate. And Quebec income tax is also from 15% to 20%. So that's why after you file your income tax, you realize that, wow, about 12,600 go to the tax. And this money, we can help you to get it back. How? We are going to use RSP. So here's an example. If we don't do any tax planning, how much tax shall I pay? Let's take this example. Gross income from your salary is 60,000. I don't contribute anything into my RSP, and then you need to pay this amount of income tax, right? So I'm going to show you how the tax result without planning. You make 60,000 a year while you're living in Quebec. After all the deductions and the source deductions, so your net income will be about 33,000. Monthly, just about 3,600. And then the tax rate is 21%, it's the average rate. The more you earn, the more you pay. So your marginal tax rate is 37.12%. What does that mean? So if you earn extra $100, $37 will go to the government, and then 63 will stay in your home. All right, so now we need to put a strategy in places. So you say, well, I still would like to keep more money for myself, for my kids' education, for my vacation, right? It's a very good reason. So that's why we are going to help you to optimize RSP each year to get the tax refund. So for the new people, my guest, I just would like to let you know that RSP stands for what? Stands for Register Retirement Saving Plan. So it's our saving plan that for the retirement purpose. Okay, so now let's help this family, for this person, to do some tax planning. So let's say he has a contribution room, 10,800. We would like to maximize that. So we put in this RSP contribution before the end of February this year. And then you can see the result is different, right? When you see the red numbers, means what? Those are the check that you need to give it to the government. But now the number become green letter. So it means what? The money will come back to your family. So it's about $4,000. Actually, just by doing this strategy, just 1 hour work, we can help you to generate $4,000. Pretty much it's about 1 month income. Is that right? So we create wealth for family by using a very simple strategy. So let's look at the results again. So it's the same, nothing changed, but with the RSP, you realize that you will get the refund of 4,000. And the average tax rate will decrease 5% to 17.84. And also your marginal tax rate will decrease as well, pretty much about 5%. And also your tax income will become 49,200, not the full amount, 60,000. With this decrease in your taxable income, what are the following benefits? When you report lower taxable income, that you can also receive more government benefits. For example, if you have children, you can get more Canada Child benefits. And also you may be much more eligible for the Rsp government bonds because certain income, they are not eligible anymore. And then tax refund, $4,000. Those are the extra you save that you can get the money back. You can take it to travel. You can use this money to contribute to TFSA, tax-free saving account. We are going to have another section to talk about that. And we also another section talk about Rsp for the children's education. So here, just a very basic for everybody. Those are all registered accounts. Rsp is saving for retirement. Resp is your saving and investment account for the children education, and tax-free saving account is to save income tax all your life. So this is how we teach people how to build wealth by maximizing all above plans and enjoy the tax advantages. Now, a lot of people ask us the question, where can I find my RSP contribution room? And here is the notice of assessment from CRA, Canada Revenue Agency. So every year after you report your income tax, and then they will send you a letter, or you have my account registered in their website, then you can simply log in and put it out your notice of assessment from last year. And here's one example. So your RSP deduction limit, so you pretty much will look at this number. It's a 19,800. So this is how much you can contribute for this tax year, okay? So number 3, you say, well, when we open the RSP account, what could be the investment choices for this account? So number one thing, a lot of people are a bit confused about the type of account and also the investment products. They are not the same thing. The type of account we call those investment accounts like RSP, ISP. It's just more like the cup. So in this cup, you put some water. The water is your cash. But in your cup, you can also put in coffee and tea. So what are the coffee and tea? Those are the investment products. So let's look at the type of account first. So when we land here in Canada, number one thing, we go to the bank, we will have our tracking account for our daily expenses. Then also, we need to save some emergency funds in our saving account. Then the rest of the account are the investment accounts. For example, Rsp stands for disability. Resp stands for education. Rsp, saving for retirement. This is what we focus today. And then also in the following section, we will also teach you tax-free saving account. When you have all the registered account open up, you still have extra money where to put. There will be non-registered account. So what does that mean? Register and non-register with whom? So registered account is with Canada Revenue Agency. So it's the federal tax department. And non-registered pretty much is those extra money you invest for your family. So here are the investment choices. But for us, mainly our work is in the blue section. We help people to invest into the mutual funds and segregate funds. And also, other than the investment account, we also have other investment type of permanent insurance. So like a whole life UL critical illness. But those are not the product you can put into RSP. What can you put into the RSP will be cash, term deposit, bonds, could be government bonds and corporate bonds, mutual funds, segregate funds, and then you can do it your own stocks, foreign exchange, option, future, and any other investment types, okay? So for us, we would like to help you to put your eggs into the different basket. So most people, when they open RSP account, they will invest either mutual fund or the segregate funds. And here, give you an example. A lot of people say, well, I'm so afraid to invest, but I never did it before, how the market could look like. Why we help people to put their money into the segregated funds? The main reason is that we want to protect the principle of our clients' money. Number one thing, for example, the person gave us like $100,000 at age of 40. And he told us that, oh, I'm going to retire at the age of 65. And then after this 25 years, nobody knows how the future holds and nobody knows how the market looks like, right? So we will look at the long term, 25 years. For example, if the market goes up for quite a period of time, and then it go to the bear market for a period of time before the retirement, and the person say, well, what if I invest for so long, but my money is not just growing, but somehow the market crash, it could decrease. So how can we help people to protect that? Number one thing, we put them into the guaranteed income fund. For example, it's like a segregate fund. It's one example of a segregate fund. We give them protection 100% at the maturity at the age of 65, and also 100% at the point of death. And then this will be the investment looks like. $100,000 put into the Rsp account at the age of 40. And then we help them to be able to grow their money. And we also can help them to reset the principal and also lock in the profits. So along this like a 10 years period, this person gained 40,000. So we will guarantee the principal, not just the original amount, 100,000, but the 140,000. And after age 50, it's really bad luck. The market is really like become a bear market for a long time. We seldom see this happen. But what if the worst case happen? This person will still have the maturity protection of his principal, 140,000. Even the market value, it just dropped to 75,000. This person have a peace of mind because his principal is guaranteed. So from this slide, one important conclusion is that whenever you invest your money, the number one rule is to protect your principal. And here I show you the function of a segregated fund, how we can help you to protect your principal, right? And now a lot of people say, well, I don't have a big lump sum of money, but I can save a little bit by little bit every month. For example, the person say, I'm going to put it $500 per month for the next 30 years. And the average rate of return is 8%. How the retirement looks like. Okay, so let's give you the conclusion. If you continue to do this, discipline, and also commit to do this, your RSP balance will rise up to $708,000 after 30 years. And in between, for example, 10 years, you say, well, how much will my RSP account looks like? So you see, well, even just invest about 10 years, your account will have a 90,000. So even though you say, well, I really start late, I don't have such a long timeline, I'm going to retire in 10 years. When you're starting to do this RSP, things will still look better for you, right? Because you have 90,000 saved up for your retirement, for the traveling, the lifestyle, and extra income to give it to your children and grandchildren. So let me give you a conclusion about the wealth formula. Number one thing, you need to invest money. Then with the time, your money is starting to grow. Then we have an average rate of return, let's say balanced portfolio, 8%. And then we need to beat the inflation. Of course, we also need to consider the tax. When I withdraw money, how much tax I need to pay, right? So when we consider all the 5 factors, then we can come up with how we are going to help you to create wealth. So it's not just like a straightforward, is that right? It's a simple, but there's a lot of factors that we need to consider when we help you to build your wealth. Now, let me also give you the historical data. So here's a big picture. So you say, well, where should I put the money? There's so many choices. What shall I do? Okay, let me just show you the historical data from 1934 all the way down to 2020. So now it's 86 years timeline. It's quite a timeline, right? Pretty much you can look at a person's life. So number one thing, you need to beat inflation. Just look at here, $10,000 when you input there. After 86 years, you need $18,000 to be able to buy the same goods and food, right? So we say, well, you need to invest. If you don't invest money, your money is sitting in the bank or sitting under your pillow. And as a matter of fact, you're losing money every time, every day. And so we say, well, if I'm an investor, very conservative, I just put my money into T-bill and to the bonds, you are still able to beat the inflation. But after that, you say, well, I would like to earn more money, have a more like an income portfolio, or you can have a growth aggressive portfolio. You can see the difference, right? So here, if you put into more growth portfolio, your $1,000 after 86 years, it becomes millions, right? So that's the difference that we can make for people. But of course, you need a guidance. You need a financial advisor to help you to see, well, what are the right choices for you, right? So next, here is our business partners in Canada. So pretty much we could not put all the logo here, but here are the major ones. You ask the question, if I want to open a RSP account, where I should open it and what are the choices, right? For us, we can help you to open the Rsp account in Bank of Montreal, IA, Equitable. And through the 3 major financial groups, we can also help you to find all the good mutual funds or segregated funds offered by Fidelity, AGF, Franklin Templeton, Investco. And those are more like in our investment side, our line of business. And then next week, I'm going to talk about Rsp loan. A lot of people say, well, I have a room, but I have no money to put it there. What can I do? No worry. I'm going to help you to say, well, how to borrow the money from the bank, from a B2B Laurentian bank, and then you can put your money into the portfolio. And your interest rate is lower than your rate of return. Now you can still gain money, right? So I'm going to show you the strategy next week. Then other than the investment side, we also protect people's health, people's life, and also when you travel, we need to have a travel insurance. Tonight will be the section about travel insurance. And also we will help you to have like a health care funds ready for you if there's a critical illness happen or disability happen in life. So the tragedy happen, we don't know when and how and hit which person, but we want to make sure every person will be protected. So in that line of business, we have Ivari, which is from United States company, and they're operating in Canada. It's called Ivari. We have a Forester, like a Bizarre, Manulife, Equitable, and IA. So our strength is that to give you variety of choices. Other than protecting the person, we can also protect your car, your home, commercial insurance. And we even have a pet insurance. So Aon is the largest broker to offer this type of asset protection. All right. So this is pretty much like I share with you today. I wonder if you have any questions. And my name is Hailing, and this is my cell phone. You can send me an email. Our group, we call ourselves Wealth Canada. We have a Wealth Canada channel in the YouTube. If you would like to listen to more other videos, feel free to go to our YouTube channel. And also, this is my WeChat code. Feel free to connect with me. Then if you have any questions, I'm ready to, more than happy to help you with that. Okay, great.